Auto component maker Gabriel India has posted better than expected set of numbers in Q4 FY20. In our ideas for profit today, I will discuss what worked well for the company and should investors keep an eye on this one now. Well, if you see, Gabriel's net revenue declined by 16.8% year-on-year. That was due to weak demand from original equipment manufacturers, or the OEMs as they are called, across all segments. Now, the decline was also driven by 24% decline in the passenger vehicle segment due to weak demand and also discontinuation of the Omni model by Maruti Suzuki. 23% sales decline in the commercial vehicle segment and also 12% decline in the two-wheelers as well as three-wheelers segment did also impact the top-line growth this time. Now, replacement segment also witnessed a decline of 10% in this quarter gone by. However, despite the significant decline in the revenues, Gabriel India has posted operating margin expansion driven by a good product mix and also favorable raw material prices this time. Now, despite the negative operating leverage as well, its EBITDA margin also expanded by 105 basis points on a year-on-year basis. The expansion was led by rich product mix, soft raw material prices and cost reduction efforts undertaken by the company in Q4 FY20. Now, the automobile industry across segments had been operating in a very challenging environment for about 1 to 2 years, and now COVID-19 has aggravated the pressure for the entire auto industry. However, one of the key challenges we will see in a post-COVID-19 world is a shift towards personal transportation as people may refrain from taking public transport. Gabriel generates more than 85% of its revenues from passenger vehicle and the two-wheeler segments alone. Now, new models being launched by the OEMs are also helping Gabriel India to arrest the fall in the revenue. In the passenger vehicle segment, it has started supplying to Maruti's Espresso model, and in two-wheeler segment, it has started supplying front forks to HMSI for its Activa 6G model. Now, Gabriel has a very strong client base. Within two and the three-wheeler segments, it supplies products to TVS, Bajaj Auto, Yamaha, Royal Enfield, Atul Auto and even M&M. In the passenger vehicle segment, it supplies to Maruti, M&M, Toyota, Renault, Volkswagen and also Honda. Also in commercial vehicle space, it supplies products to Tata Motors, M&M, Ashok Leyland and also Daimler. Strong clientele has helped the company's strong financial track record and should give investors the required confidence for stepping into the company. Now, Gabriel has established itself as a dominant player in the industry. Gabriel India has been focusing aggressively on the aftermarket, where it has more than 40% market share and where there is a huge opportunity going forward. Now, in the quarter gone by, it also operationalized two new product lines, that is drive shaft and brake fluid, which received very positive market response as well. Now, Gabriel's stock price has corrected 44% from its 52-week high levels, now making valuations quite attractive at this moment. Currently, it is trading at 12 times the FY22 projected earnings, which is very reasonable. Now, preference towards personal mobility post-COVID-19 coupled with its strong and diversified base of customers that it has, improving product mix and also focus on the high margin aftermarket segment also make Gabriel India an ideal candidate for long-term investors.